Hello friends, in the series on the income tax cases, today we will discuss a case which is based on the disallowance of payments or the expenses which have been made in contravention of section 40A subsection 3. There is a section 40A which talks about expenses or payments not deductible in certain cases, and in that section there is section 40A subsection 3 which talks about that if an assessee makes a payment in a day more than 10,000 to a person, then that payment is disallowed under section 40A subsection 3, meaning that that payment is not allowed as an expense. Now the question before Raipur ITAT SMC bench was that whether the assessee can take the plea to bypass the disallowance under section 40A subsection 3, that the AO has not doubted the genuineness of the expense, so section 40A subsection 3 disallowance is not justified. This particular issue has been taken up in the case of Shubh, Karan, Mahnot versus income tax officer, and this case is reported in 120 ITR Tribunal at page number 221. Present case, the assessee has made two payments in cash in contravention of section 40A subsection 3. One payment is rent of godowns and the second payment is electricity charges paid to a public sector undertaking which is 100% owned by the state government, and in that public sector undertaking there was deep and pervasive control of the state government. The assessing officer made the disallowance under section 40A subsection 3 for both the expenses, that is the rent of the godowns and the electricity charges paid. When this matter was before the CIT appeal, the CIT appeal upheld the order of the assessing officer by stating that since the assessee has not given the evidence that the payment has been made in the limits which are mentioned in section 40A subsection 3, so the disallowance is justified. When the matter was before the tribunal said that the assessee plea that the AO has not doubted the genuineness of the expenses is not relevant for escaping the disallowance under section 40A subsection 3. The only way to escape the disallowance under section 40A subsection 3 is that the assessee has to prove that his case falls in the exception given in rule 6DD. So the tribunal was of the considered view that in the present case the rent of the godowns is straightaway covered by the disallowance under section 40A subsection 3 because it does not come into the exception given in rule 6DD. But as far as the electricity charges paid to a public sector undertaking which is wholly owned by state government, that is the 100% shareholding is with the state government, so the case of the assessee falls under the exception given in rule 6DD clause B, which says that where a payment is made to a government under the rules framed by it, such payment is required to be made in legal tender, and in that case the disallowance would not be called for under section 40A subsection 3. So in the present case, since the payment has been made to a public sector undertaking which is wholly owned by state government and the 100% shareholding is of the state government, so the assessee case falls in rule 6DD clause B, and the section 40A subsection 3 would not be attracted. So friends, the conclusion of the case is that whenever we are countering the section 40A subsection 3 disallowance, then the plea of the assessee that there is no doubt about the genuineness of the expenses will not come. For the help of the assessee has to prove his case, that his case falls under the exceptions given in rule 6DD. At the end of this video, once again I am repeating the name of the case. The name of the case is Shubh, Karan, Mahnot versus income tax officer, and this case has been reported in 120 ITR Tribunal at page number 221, and the matter has been decided by Raipur ITAT SMC bench. Thank you friends.